The first weekend of 2026 has been electric. Bitcoin is aggressively pushing against the $90,000 ceiling, a level that's been a tough nut to crack for weeks. Analysts are glued to their screens because a solid close above this mark is seen as the final green light for a massive run-up to 100K. What's amazing is that while traditional markets are seeing New Year profit-taking, crypto capital is staying put, ready for the next big move. There's a sell wall between 90 and 92,000, but the bulls are just eating it up. Sentiment has flipped from cautious to full-on bullish. And guess who's fueling this fire? The big institutions. On the very first trading day of the year, Bitcoin and Ether ETFs saw a massive $646 million in net inflows. This is huge. It shows that the big money players are rebalancing their portfolios for 2026 and they're choosing crypto. Funds like BlackRock's IBIT and Fidelity's FBTC are leading the charge, buying up thousands of coins and locking them away in cold storage. This creates a supply shock, making the remaining Bitcoin even more scarce, especially after the halving. If this trend continues, we could see a serious supply crunch that forces prices sky high. It's not just the ETFs either. Tether, the company behind the USDT stablecoin, just bought another 8,888 Bitcoin. Their total stash is now getting close to 100,000 coins, worth over $8.6 billion. By using Bitcoin as a reserve asset, Tether is making a powerful statement about its long-term value. This consistent buying creates a huge, predictable demand floor for the market. On-chain data also tells a beautiful story of decentralization. A metric called chip concentration, which tracks how much Bitcoin is held by giant whales, has just hit a multi-year low. This means coins are moving from a few massive wallets into the hands of more and more smaller investors. A more distributed supply means a healthier, more stable market that's less prone to manipulation. This directly counters the fear that ETFs would centralize Bitcoin. Instead, we're seeing a perfect balance between institutional heavyweights and a growing retail army. But there is one wild card: the upcoming Federal Reserve meeting. After cutting rates last year, the market is anxious to see if the Fed will continue its easy money policy or hit the brakes due to inflation. A stronger dollar could be a headwind, but many believe Bitcoin is starting to act more like digital gold, a safe haven in times of economic uncertainty.